10-year Treasury note futures opened this session moderately lower, with yields edging ever so slightly higher. Overnight data, MOF from Japan, net sellers of global bonds, but unchanged over the 6-week average. More importantly, Japan Tokyo's CPI for March beat expectations. Some are saying that led the 10-year JGB bond to hit a 6-year high in yield. And in sympathy, we saw the 10-year German Bund hit a 6.25-year high. That said, the curve continued to flatten, and the market continues to look at headlines with regards to geopolitics, energy, and also the China pandemic. Now, go into mid-morning session, futures really did plunge. And at one point, we saw yields at a 2.75-year high, despite really poor data. We had February pending home sales down 4 million month over month. They were expecting an increase of 1 million. University of Michigan, downward revisions now sitting at a 10.5-year low. That was somewhat, or perhaps a lot, offset by Treasury Secretary Yellen, who said that the economy is resilient. Also, Bank of America thinking that a contrarian indicator is out there, and this is a good buy signal for the economy and the equity market. And most importantly, Citigroup, who said that we're going to see 4 consecutive half-point hikes by the Federal Reserve. So that said, the city was cited as saying we're going to see the effective Fed fund futures rate between 3.5 and 3.75. Getting into options, I'm looking at CME Group CVOL, looking at June, 1-month basis to 85th percentile, 3-month basis to 95th percentile. At the money vols are higher on the day. SKU is higher as well, as both variances, the call and put variance, are both higher, although the call variance is much higher than the put. Option volume steady, June 123 half calls. On the put side, seeing volume 121 half and 121 puts. Lastly, CME Group E-Micro Mini yield-based Treasury futures, very strong volume today. Yesterday's volume was 7,445 with an open interest of 2,020.